The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 88. You get the Nasdaq up 24. S&Ps are up 8. Gold contracts down $1 at $1,316. We have silver off 8 cents, $19.20. Light sweet crude's the number, Tom, down 42 cents, breaking out that little swing point, 43, 44. Has some juice underneath it. You know, we'll see how the rest of the day brings, but the bottom line is oil market down is going to keep some pressure on the market. Bonds, the 10-year note up 5 ticks, 130.19. The 30-year bond up 29 ticks, 166.20. And good old King Dollar. King Dollar's up 74 ticks. It's rejected lower price once again. Rejected it yesterday. We're at 95.83. You get the euro trading at $1.11. The yen's at 101.69. We have Fed Day tomorrow. We have the Bank of Japan tonight at 10 o'clock. 10 o'clock our time. Oil numbers tomorrow, too. Oil numbers tomorrow. Gas numbers Thursday. And guess what we got right now?
What do we got?
We got our man, Mr. Kevin Hinks from TD Ameritrade Think or Swim. And don't forget, folks, every trading day right here at TFNN, 12 to 1 Eastern Standard Time. Kevin and Scott have a great show. You can get that show right on your cell phone, folks. Go to TFNN.com, hit Tiger TV. You're going to get some great education inside the option and general market in general. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
How you doing, man?
Morning, Kevin. Florida's good.
Yeah.
Yeah, we still get some serious heat, that's for sure.
Yeah. September throws some heat in here. Yeah. There's no doubt. It's a different heat. I don't know if it's just the sidewalks have cooked up for so long that now they're boiling, man.
Sidewalks.
I'll tell you what, when you drive around Chicago this time of year and you start seeing pumpkins, it starts to scare you about what's coming down the pipeline.
Yeah.
So we're a little panicked here about pumpkins being out.
Hopefully you get some good September weather to enjoy.
Yeah.
Exactly.
Yeah.
Yeah.
How's everything going? So all we can do now is sit and wait. I think this market's going to drift.
You know, listen, there's no doubt. You know what's intriguing is that particularly because, you know, we're all in the commodity market too. You know, the Bank of Japan, this thing's going to be a trip. It's like, okay, we're all waiting for the Fed, but I was looking at that saying, well, it's going to be interesting. The Bank of Japan will come out at 10 o'clock our time, I guess 9 o'clock your time, as to, you know, what they want to do. And that yen, man, you know, we'll see. It's so weird that as they kept putting stimulus in, folks, the yen kept getting stronger. And like that's not what they wanted. It's like, how does that work? You know what I mean?
Right. I said this yesterday on our swim lesson show. The Bank of Japan could very easily steal our Fed's thunder.
Yeah.
Coming out tonight and take all the headlines away from them. Because let's face it, our Fed's not going to do anything.
Yeah.
So, you know, the Bank of Japan really could be the headline. Tomorrow and late tomorrow, and what moves the market. But that said, Tom, you've seen it enough times, and I've seen it enough times. Even though everyone in the world is prepared for this announcement,
right,
or lack of announcement, the market will move on this.
I know.
No doubt.
I know. Tommy and I were looking at the yesterday on you know the higher 40 points or lower 40 points, and it's like it's kind of balanced.
Just how some are priced.
The S&Ps. Sure. You know what I mean? It's like, wow, man. Okay, so and you know. It's like, yeah, they're going to move one way or the other. And if they do go topside, man, they really can go topside. Because it's like that NASDAQ, you know, yesterday it gave it up. I mean, that's the fourth time up there. It's like, okay, man, you know, so. And then the NASDAQ, folks, in general, is highly volatile. It can go up, and then, but when that thing wants to go down, get out of the way.
Big moves.
Right.
Yeah.
And, you know, so many people. You know what I love to watch? You watch the TV and you watch people talking, and no one wants to commit to what they think this market's going to do because, let's face it, Tom, no one's ever been here before.
Right.
You know, we can talk about Fed moving up and interest rates and Fed moving down, But we've never been at zero for this long, so no one really has a game plan for what this is going to be like.
I know.
So, it's very interesting. Like I said, it's fascinating to watch this.
It is. And, that's why options in general, folks, defined risk is such a great way to, basically set up a portfolio. What are we talking about today, Kevin?
Butterflies.
Butterflies. I like it. Okay.
Yeah, and how they can help, move positions. If you have a position on, taking advantage of the butterfly spread is, it's not the easiest thing in the world, right? Just like when you do something, like a butterfly has 3 sides to it. Right? An iron condor has 4 sides. Those aren't the easiest trades to get into because of all the sides.
Yes.
And they're commission intensive. So you got to be smart. You got to be nimble on how you do this.
I like
it. To make sure you get it the most efficient way. So, we got a lot to talk about today.
And so if you're driving in your car right now on the West Coast, nice and early in the morning, having a great day, I hope. Bottom line, folks, remember, right on your cell phone, you go to TFNN.com. On the right-hand side, you hit Tiger TV. You're going to get some great HD video as well as audio. Kevin, Scott, they have their charts up. You're going to see what a great platform TD Ameritrade Thinkorswim is. So check it out. Kevin, you have a great day, a safe day, and needless to say, between now and the next 48 hours, man, we're going to have some fast fingers.
Hold on tight, guys. This is going to get a little bumpy.
Hold on tight, baby. Okay, Kevin, have a great one, man. Guys. Have a safe one. You stay right there, folks. Tommy and I are coming right back. Dow right now is up 75. The Nasdaq's up 17. S&Ps are up 6.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow right now up 80. You got the Nasdaq up 17. S&Ps are up 7. We have gold off $1. Silver's down 8 cents. You got the notes up 5 ticks. The bonds are up 30, almost a full point, and good old King Dollar's up 109. So yesterday, we're on the air. Bottom line, market looks pretty good. And then
we went to lunch.
We did some business.
And
exactly.
Then we came back.
We come back, and it's like, wow, what happened here? And the reason I'm saying it like that, folks, is that it's unusual that, when you get Europe is up nice. We'd already had monster volatility for 4 days last week, and then all of a sudden, guess what? We have sellers up at these higher levels. So today is also going to be a big day. If we go take a look at these futures for a second, the S&P futures, and even when I did the update, we'll see whether it can even get to the highs of yesterday. The highs of yesterday in the futures were 21.46. We've made it to 21.43 today. And let's just see. So, yeah, and the 43 doesn't have a spike, So you spike again is down at the lows. So I suspect we're going to be at 21.38 before we're going to be at highs. And it depends on how it hits that 21.38. The NASDAQ, we go over to the NASDAQ, and, the NASDAQ, it's pretty amazing. So the high in the NASDAQ yesterday was 48.41. And, I mean, that's set up there, if you're into technicals, it's very unusual, folks, that you can see a setup that you're dealing with the 4,800 number and you get like 4 tests of it. Do you know what I mean?
Yeah.
It's like, how do we all decide that, okay, we're selling up at that point? I mean, something is stopping it at that point. It doesn't mean, it will stop. I mean, tomorrow's going to be a big day. I mean, this thing, we all, whether you're bullish or bearish, we can each make the case that, hey, let's, this is going to bust topside, bust downtown. But how that works out, it always intrigues me, like, wow.
Sure.
Yeah,
definitely.
That is a big number. There was a story yesterday, and there's a story over the weekend about CalPERS. So CalPERS is one of the biggest pension funds.
Okay.
And they hold many of the cities and the communities in California. Okay. They hold all their money. And what they were talking about inside that fund is that, so let's say we go from 1980 to now, it's like $3 trillion, I believe, that's in there. But what has happened is that because so many people are retiring, that they have to actually start selling out of 4 of the last 5 years, because their actuary, yeah, would be that they have to make 7.5% a year in order to pay out all the pensions. And even at that point, they're only funded 70% of what they actually need. Okay. But the quote was pretty amazing, and it was like, you don't know what put sell-offs, but the quote by one of the managers was that, hey, listen, in the future, right, even now, we have to keep selling in order to pay out our liabilities.
Sure.
Now, that's pretty intense, because that only started happening 4 years ago.
Okay.
That there's a net selling versus a net buying on a continual basis. And, if we have that happening in a lot of pension funds, that's a big difference, because they're, one of the largest owners of equities.
It's huge money.
Yeah, huge money. Let's go and take a look at inside the NDX as to what the strength. Oh, this is wild, folks. So I'm just going to change gears on you for a second, because I saw this inside the Tigers Den. So the Wells Fargo CEO is testifying today. Wells Fargo gaps higher. Now that's the market.
And then pulls back, though.
And then pulls back. No, it's just deviant. You know. So yesterday let's see. Yesterday, Wells Fargo closes at 46.01. It opens this morning at 47.15. It's at 46.61. And what did happen last night is that I suspect they're going to throw, let me see the guy's name, WFC, they're going to throw this guy under the bus, because the chief risk officer took a leave of absence last night.
Oh boy.
Exactly. Let's see where this is. I mean,
internal compliance, that's supposed to be their job.
Right.
That probably is, more so than even the woman we were talking about, the head of that community banking division. It is the people, that's actually their job is to assess those types of...
yeah.
Who knows? We'll see who, but, that seems like an easier scapegoat, let's put it that way.
Yeah, there's no doubt.
Because those, especially when you're dealing with regulators like banks, you have people that are basically designed to be in-house regulators.
Right.
So.
Right. Yeah, there it is right there. So, yeah. Let's see. Yeah, Anderson, Claudia Russ Anderson began a 6-month unpaid leave on Monday, becoming at least the second senior Wells Fargo executive to depart.
That same community banking division, too.
Okay. Yeah.
He was head of risk for that unit.
Right.
There you go.
Which houses the retail business.
That's probably something you should have been looking at. If he was head of the risk for the units.
Oh, yeah.
Opening up random accounts seems like something that the risk officer should be looking into.
Slightly, right?
Slightly.
Slightly. So
that's where who covered themselves? You know what I mean? I mean, if he's, that's really where it's like, because see who holds those responsibilities. That'll be the battle.
Well, the thing that's intriguing, and you had said this last week, is that either way, whether this was done on purpose or it wasn't done on purpose, and they couldn't control the 5,200 people, that means they are too big.
Right. And it's one or the other. It can't be. It can't be. Neither.
Right.
That's
You
know what I mean.
Right.
And they want to spin it as neither. They want to spin it as no, we're cool. This isn't our culture. Everything's fine. We're managing things well.
Right.
And it's like no. It's either part of your culture, or you're not managing things well, and you can't.
Exactly.
So you choose.
Yeah.
Maybe you don't get to choose, but in defending it, you really do only have one option as to choosing one side, and they don't like either side. But
no,
that's where it falls. Yeah.
I know. And it's because they've fought the too big.
And it's probably a mix of both in reality. You know what I mean? And then it's not, something that there were probably executives that had no benefit from it, right? So they don't want that happening if they have no benefit. They're not even involved. The CEO, I don't think he has like a vested benefit of something like that. Maybe he does, but. There's, but that's the point where, well, he should have been more all over it then, because the people who did have a vested benefit, who were kind of acting a little bit, call it whatever you want, shady, just looking the other way, just allowing that thing to happen, not punishing people enough when it did get caught, that type of thing. They need other people to control them, right? I mean, that's where, so there's slights all around.
And the aspect that everyone's just too busy, and they're pulling in mortgage-backed securities. There was some of the problems.
I was just going to say that, when you're in, a sales organization, that doesn't stop to, just even, make sure that everybody's numbers make sense, right? Well, that's part of the culture then, that you've created a culture that's all about sales and nobody paying attention to even whether, people are doing things right.
Right.
And to be one of the biggest banks in the country, that's a big problem, obviously.
It is. You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow Industrials right now are up 74. You get the NASDAQ up 15. S&Ps are up 6.5. Gold's flat. Silver's down 5 cents. We're going to be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 76. We got the NASDAQ up 18. S&Ps are up 6.5. And let's go to our man Carlos. And Carlos is in Mexico right now. What a beautiful thing that is. Carlos, what's going on, brother?
How you doing, guys? Good morning, Tom.
Morning, Carlos. Good morning. Tommy. So, where about in Mexico are you?
I'm in Riviera Nayarit, which is between Puerto Vallarta and the city of Tepic, which is about 2 hours and a half of flying from LA.
Okay. I'm gonna have to. I'll look at the map when we get off. Okay, cool, man.
Yeah, it's a very nice area. It's actually it's in the last 15 years they have developed this area.
Yeah.
They have the marina and everything you need around here.
Oh, you can go fishing. A lot of good fishing down there, right?
It's a lot of marlin.
Okay.
Yes.
So I think I know.
Very popular place.
Yeah, on the map I think I know because Puerto Vallarta is a big marlin place too, right?
Yeah, Puerto Vallarta is on another state.
Okay.
New Vallarta, it's on my hometown state, which is a beautiful place.
Sweet.
Very beautiful place. Yes. And the temperature, to give you an idea, it's around 85 degrees.
Okay.
With, between 50 to 60% humidity.
Really?
Nice.
And the water temperature, goes around 78, almost 80.
Perfect right now.
Yeah. Wow.
And the weather remains about the same around the year.
Oh man, that's awesome.
We get a lot of tourists from Canada and a lot of tourists from United States.
I can see why.
From the east. Yeah, to tell you the truth, I don't want to give Bosco a free advertisement, but their deals to come to this place are very inexpensive.
I know. Well, and there's a lot of. I mean, I have a few friends that retired down there. You know what I mean? I'm not quite sure exactly where they are, but you know, it's a nice place, especially when you get some of your friends down there.
I bet.
You know?
Oh yes.
Yeah, totally.
Yes, and the reason I called today, Tom, is about the dollar.
Okay.
Okay. And I know right now the dollar against the peso is showing that it's getting close to 20 pesos dollar. But in the real economy here, people is actually a little afraid of take the dollar to those levels.
Okay.
And when I say afraid, if you take a taxi or if you hire or rent a car, or want to pay in dollars, they can take the dollar up to 15 pesos. That means almost 5 pesos lower than the spot. Now, if you to go to a bank, they don't pay you what the official price is because they know how tremendous is the fluctuation between highs and lows during the day.
Yes.
So they're afraid of taking chances right now, either one way or the other.
Okay, this is cool, man. Okay, I got to wrap my head around this just a second. So, right now, the peso is 19.68, and I think that means 19.68 pesos to $1 US, right?
Yes.
Okay, yes. And so what you're saying is that for goods right now, there's, the dealer on the other side, meaning just you or I, if we were down there doing business, they're saying, no, I'm going to take 15 because I think the peso's too weak, right?
Yeah.
Yeah,
yes.
Cool. Okay.
Actually, they can take up to 15.
Yeah.
Meaning they will only pay you 15 pesos per dollar, even though it's close to 20.
Wow.
Because they try to protect themselves because they have to go and take that dollar.
Yeah.
A taxi driver has to take that dollar to the bank, and the bank will not take it for the highest price. So it's always that fear. I noticed that on the street that they have fear to take the dollar because the volatility.
You know what we got to do, man? I mean, maybe we can make a big business out of that right now very quickly because I suspect that if we went to a dealer down the street, we're going to get close to $19, 19 pesos per dollar. You take that money, you go to Mexico, and then you buy something else that is compatible that you could sell in dollars.
Yes, and see the tourists here, like in the hotel where I am.
Yes,
there's a lot of Canadians and a lot of Americans.
Yeah,
are actually getting for the dollars 16 pesos.
Okay.
So what I did, I stopped spending my dollars.
Okay.
And I told my daughter to wire me from the United States. They only can wire you up to $850 a day.
Okay.
But I told her to wire me that much money in one single shot.
Yeah.
So I can go to Walmart. Yeah. And they will pay me over 19. And that's the way I can make the difference.
Totally.
Otherwise, I will give him a lot of money away. Just for every 100 pesos, every $100, I give him over 400 pesos and $100.
Oh, I know. No, that's so cool, man.
Yeah. Yeah.
And that won't stay.
Way to make some money.
And that won't stay like that for long because, believe me, you got. I'm not kidding when I say that. Okay, hold it, man. Mexico, folks, you can jump on the plane in about 2 seconds, and I don't know, you probably can bring in 10,000. I know you can bring in 10,000 to the U.S. underneath it. It's not a big deal. But if you start talking that kind of money with a spread of, that's a spread almost like 17% or something, right? Which is money?
Yes.
That's big money.
The rate here is very, very, very high. To give you an idea, I'm trying to shop for a property.
Okay.
And very near to some American communities.
Yeah.
Very expensive. But since I know the town, I look for areas where it can be middle class and very inexpensive.
Yes.
Compared with the American communities.
Yeah.
And I still get maybe better beach, better views for cheaper price.
Oh, listen, there's no doubt. It just cracks me up when we go anywhere, and that you can see. Specifically when I'm talking about, folks, you go to another country, whether it's Costa Rica or a couple other countries I've been to, you have these places that they'll build condos, they market the United States, they sell them there, and guess what? If you stayed around that city for another 5 or 6 weeks to get to know the city, you can go right down the street and it's just as nice, and it's half the price. Well, it's not an American built-up deal, but why do you go to another country to get an American built-up deal? Do you know what I mean? It's like, no, I'd rather have a nice cottage,
Sure.
You're right inside town or you're at the beach, man. So.
Yes, especially if you buy from somebody who, I don't know if you know, but if you are an American, you cannot own in Mexico.
Okay.
That's one of the things.
Yep.
But if you have dual citizenship, you don't have any problem. So you can own the property. Now you can lease the land for 30 years and then extend it again extend it again until your family or you don't want it no more. You can just sell the property. But that's one of the only situation for an only American citizenship.
Right.
And the other thing, Tom, is rates here, 16 to 17% if you want to buy a property. So if you have the cash, yeah. Well, I've been looking for it, and I'm willing to pay cash, and have a very decent year thanks to Tom O'Brien.
Oh, you're too much.
And well, if I get a deal, I'll let you know.
Let us know. You're going to get a deal. Let us know, man. We want to follow this. This is a beautiful thing.
Perfect.
Well,
Carlos.
guys, sorry to take all the segment.
No, we appreciate it. That was a great education for us, man. Pretty amazing, actually.
It's always nice to talk to you guys.
You too, man. Have a
And
great
remember,
one.
mi casa es mi casa, es tu casa.
Perfect, man. Take care.
Like volatility continue to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 46. You get the NASDAQ up 9. S&Ps are up 3. This market's having a hard time holding price. And, folks, if you haven't test drove the Nadex platform, great time to do it. You can come over to our website at TFNN. You'll see the banner either on the top or the side or both. You can hit that banner, bring up the exchange, and walk with us as we take a look at these defined option contracts. Yesterday I put...
Defined risk contract?
Defined risk contract. What did I say?
Defined option contracts.
Oh, okay. Defined risk contracts. So yesterday I put on a trade. Now, this is a weekly trade. And I'm looking for the S&P to close
2114.50.
Okay.
Below that number. So you had sold the binaries at that number. The weekly binaries in the S&P 500.
Yeah.
Those expire Friday at 4:15. You got them at 78, selling them at 78. So basically, you're risking the 22 to the upside, 78 to 100,
yes.
and your max profit is the 78, basically, per contract. So what's interesting is that right now, this is the contract right here. So, you know, it's showing that your position has a profit of about $5, which is $1 per contract, and that's because if you want to get out, you're getting out the offer, right? But you sold at the bid. So you sold it at 78. So the market has come down.
Actually, if I want to get out, I'm going to get out at the bid. I think they won't give me the offer.
You're going to be bidding. You're going to be trying to. You're going to bid into the offer.
Yeah, right. Nice. Yeah.
It gets confusing when you're selling them. That's why you go through it nice and slow.
Okay.
You know, because that's what I'm going to illustrate is that like this is showing you're only up $1 per contract.
Right.
Which you are, because if you have to exit it, you have to pay the spread.
Yes.
But if you wanted to reinitiate that position, you'd be paying $28.75 right now, as opposed to $22.
Right. Okay.
So now with that though, the market has moved from 2143 approximately, which is where it was. I just happen to remember when you got into it. So the S&P has declined 7 points.
Right.
Which is a pretty decent move in your direction in one day.
Yeah. It
just
is.
to put it, you know,
is,
so you've lost some value in time,
right?
Because you lost a full day, 1 out of 5, 20% of the remaining time for your option,
right?
And that's where, you know, it might move a little bit more if you can get that movement in less time.
Right. Now let's look. Yesterday we were looking at the other side of that too.
Sure.
Because the other side of that's going to be cheaper now, right?
Yes, because you're down 7 points for sure.
Right. So the other side of it would be that what we'd be looking at, folks, is that at 2 o'clock tomorrow afternoon, the volatility will increase because of what the Fed says. And what's intriguing, actually, I think it's going to probably increase tonight because of the Bank of Japan. You know, and so yesterday,
I'm just pulling them
now
up.
I'd need 47 points on the top side. Actually,
well, that's what I mean. It's going to be cheaper, and it's going to be cheaper because, right? You were at 20. The one we were looking at was 2174.50.
Right.
Now it's still 15.25 right now.
Right.
Yesterday it was flirting at about 18 or so.
17, 18. That's right.
Yeah.
So it hasn't come down that much.
No.
Yeah.
But the other thing you could do, right, is that let's say you wanted to shave a little bit off to the upside because you have.
That's right, because it's come down.
So you paid $22 on one side.
Yes.
And your lower end is 2114.50 right here. You can see on the chart, right?
Yep.
This is your lower band where you become profitable if it closes under it right now. You have all 5 contracts. But you could choose to say, well, maybe I think I want the market's going to close outside of a smaller range now. You can lock yourself in. Like you could have an upside instead of going all the way to 2174 that you were going to yesterday.
Right.
You could maybe go to 2162, and the 2550 plus your 22 would be 4750.
Right.
You'd still be getting like a 1-to-1 with combined what you're paying for the 2 contracts.
That's closer.
Right? Yeah, with a smaller range in terms of then, as long as it closes outside of 2162 or 2114, so you're talking about like a 48-point spread.
Right.
You're profitable. You know, you could take that all the way down to even the 2150.
I know.
And then you'd be only risking 60. So you'd be risking 1.5 to 1, and you'd be profitable anywhere outside of 2150 to 2114. That's only 35 points, which is not bad for about a risking 1.5 to make 1.
Right. Right.
But it's knowing those options, and then you get to figure out what you want to do.
You gotta love it, man.
Yeah.
It's going to be intriguing to see how this whole thing shakes out.
Yeah.
You know?
And what we kind of talked about yesterday is if you do want to limit yourself to directional and just play like a bounce in either direction, this week might be cool in that there's so much news coming Wednesday.
There is.
Where you can take whatever side off that the market goes in your direction.
Right.
And then
leave the other
just
on.
see, and that's not a trading methodology, but you know, maybe this week you say there might be a potential for a bounce and a pullback no matter what the news is. The market might overreact, which we all know is possible.
Which it does a lot.
And you'd have 2 full days for that market to kind of like recalibrate, or maybe, and so that could be a strategy. Yeah.
No,
for sure.
I like that strategy. There's no doubt about it.
Because so what's cool is, right, just to put it, when I'm saying risking 60, right, which is the combined, let's say we cut it down. We chose 2150 to the upside. Let's say it was at like 38. So we had 38 plus we got the 22 that we sold the 2114 at.
That's right.
So we're in at 60. Right. So I said you're risking 1.5 to make 1, which is you're risking 60 to make 40.
Sure.
But that's assuming only one of them expires in the money, and your maximum value is $100. Well, guess what? Let's say the market rates come out. They say we're definitely raising rates this year. Market says, oh man, we better shape up to it. And market falls apart.
Right.
Well, then you cash in your short side.
Right.
For let's say it spikes down to below 2100.
Right.
So you're good in the money. And let's say you can get out at like 75.
Yeah.
Okay. Because there's still going to be value in that Wednesday. Because there's 2 days left. They're not going to let you. There's going to be people on the other side of the trade that demand some type of premium for that type of risk. So let's say you get out at 75. Well, then, if this just happens to climb back above 2150,
overnight
get
says,
the full value.
That means things are going great.
Exactly.
Yeah.
So you could actually get out of that with like 175. Now you will never be able to get out of it for 200 because they both can't.
Right.
But you could get out of it for like 190, 185 in an ideal scenario where it has to spike way past that 1 point, or guess what? You could where it just hits your strike price, and maybe you exit those for 50.
Yes.
And you get almost your money back.
Right.
And then at 2114, you only have 35 points to the upside with all your potential there, with most of your capital covered. There's a lot of ways. There is.
No,
it's cool especially with all the news this week.
There's no doubt. And what we do have is that inside that statement, if in fact this railroad train is going to start moving, that's going to be scary for everyone.
Yeah, and like Kevin was saying at the beginning of the show, no matter what we kind of think, no matter what is going to come out, the market's going to move. How much it moves, how quick it moves, for how long it moves, the force it has, the volume, we don't know. But there's going to be some action for sure.
There is.
Because like you said, it's just too big of a deal. We've been at zero for too long, and it's there's too much uncertainty. That's the real part where usually the Fed says something, the market understands the implications, and it reacts.
Right.
The market doesn't really understand the implications, and that's what you see, the seesaw, the battles of, and that's why it's so volatile on those types of announcements.
There's no doubt. Our phone number is 877-927-6648. Let's take a look at some of the higher volume stocks out here. You stay right there, folks. Tommy and I are going to be coming right back. Our phone number is 877-927-6648. Dow right now is up 59. You get the NASDAQ up 13. S&Ps are up 4.5. We're going to be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And don't forget, folks, right after our program, we got our man, Mr. Basil Chapman, coming up next. Then we're going to Thinkorswim headquarters in Chicago with swim lessons. Steve Rhodes will be coming up 1 to 2. Dave White 2 to 3. I'll be back 3 to 5. And our man, Mr. Andy Hecht, of course, is going to be on 5 to 6. A lot of action out here today. And bottom line is that this is going to be all night long, right up until tomorrow at 2 o'clock.
Could argue all week long.
Yeah. Oh, yeah.
Here we go.
I know, man. It's crazy. And, you know, the market, you know, bottom line is just running back and forth right now.
Yeah. There hasn't been much. I mean, we have pulled back a little bit, right? 20 Dow points, maybe 30 Dow points throughout the hour, but realistically not much action at all.
No. And let's see.
One more time.
There you go.
Go for it.
And that was pretty weak. So the Dow didn't make the highs of yesterday either. So that's going to get intriguing watching this whole thing shake out. There's, hey, but bottom line is the Bulls can make the argument you're still at highs.
Oh, for sure. And we are. Really. We're at some amazing levels in the indices across the board, no matter, for sure. We'll see if we can stay there.
Right. And I'd keep your eye on that 30-year. So the 30-year out here this morning, folks.
We're higher today.
We're higher. And it's, you know, it doesn't have the volume, but it's holding price, man. I mean, you know, it's over that, you know, right at the $166.19. You know, so if I could get into that a little bit higher, you know, you could get some action there, meaning that would be going up and the rates would be coming down. And, you know, the last 2 weeks, it's just been the opposite. So this volatility, I suspect, is not only going to be there, but more than likely, as we come into this, it's going to get a lot heavier. The real key is going to be, what is in this statement? Are they saying they're just going up?
Yeah.
That's WIRP. I think we were 58 yesterday. 56. You're at 56% for December 14th.
Yeah, pretty similar to where we were yesterday.
Yeah.
And I'd be surprised if that moved at all before. In the next 24 hours before, because that's why there's supposed to be that quiet period. That, you know, that there should not be anything. There might be news, there might be stuff like that, but there probably shouldn't be anything big enough to move those numbers.
Right. No.
They don't want there to be, at least. That's not their ideal situation.
Yeah. What we do have, that oil market. Just look at this quickly. CLX6. The oil market. You know, this thing. 303,000 contracts. That's still big volume. You know, it hasn't had much movement, but it got all these swing points. 43.59. It's still below them. You know, that's a little dangerous, because the next swing, what happens here, folks, is your next swing is down at that $40 mark, 40.77.
Yeah, we're close.
Yeah, no, it's.
I mean, if you look where we just were, we're really close in terms of, you know, we're just approaching $50 again.
I know.
Now we're just approaching $40.
I know.
That's 25% cut. 20% cut from 50 to 40.
And when you're talking about millions of barrels of oil,
20% cut on a commodity that you know, the combined value is just almost inconceivable to the normal human brain in terms of how much oil gets used, consumed, bought, sold.
Because Could you imagine that we own an oil field and we have to this, and you sell it in the morning, and like, if you waited to the afternoon, you could have made like 20 million more. It's like a mind blower, right?
Yeah, right.
Or lose 20 million. Do you know what I mean?
Yeah, no, for sure.
You know, they probably sell it like they sell gold. The way that gold gets sold, there's a 20-day average before the banks pay them. You know, that's that's how most gold miners get paid. Do you know what I mean? So, which is probably makes sense. I mean,
yeah, that would, right.
Yeah.
Otherwise, you do open yourself up to like that 2 days of just processing the transaction to get out of that.
Right.
You know, to get a hedge, basically.
Yeah, exactly. Yeah. You stay right there, folks. We do appreciate you growling and prowling with us. Man, Mr. Basil Chapman's coming up next. We have the Dow Industrials right now up 58. NASDAQ's up 14. S&Ps are up 4. Thanks, pal.
Thanks, man.
Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.